Good afternoon. Ira Epstein of Linn & Associates with your SPDR ETF video for this Tuesday, and we're now at the 14th of April 2020, and the time just after 6 p.m. Central Time. So tomorrow will normally be tax day. We're not getting that at all. And I will tell you, this stock market's been on a tear to the upside. You've cleared a lot of the 38% retracements from top to bottom, going into the 50% range, and you go much higher. And I think those of us that had been bearish have to change their complete attitude that you're going to go back down and test everything. Now, we know we're going to get bad news this week. They're already looking for 5.5 million more to hit the unemployment rolls. That'll bring us up to about 22 million, and I don't even know what the percentage of unemployment that'll bring, but it's about 1 out of every 8 that can work will have been on the unemployment roll. It still means there's a lot of us that are employed, but there's a lot that aren't. Now the question is how to get those that aren't back to being employed. And as you can see, governors across the United States are forming regions to figure out a work plan. The president says he has authority over them. I doubt he does. I think they have guidance. I think he's got the purse strings. So if the governors want to really act crazy, he can stop the purse strings. So they're all going to get along. But there's this thing, it's him, and the other people say the governors, it's them. Who cares? Let's just work together and get it all done. That's going to be the key. The problem with all this is when we reopen, how do we stop from getting it in social once we start sitting next to somebody? We're in a restaurant with somebody. What do you do with all that? AMC said that it's considering filing for Chapter 11 bankruptcy. Those theaters won't go away, but there's restructuring. And I know this firsthand because I owned a movie theater at one point. And you learn the game very quickly as to what it is. So let's take a look at the technology sector, because this is the tiger that's been let out of the bottle. FANG stocks, F-A-N-G, this is it. They're moving dramatically. Even Tesla today, a big time. I mean, Tesla's moved like 60% this week or past 2 weeks. It's dramatic in what it's done. And you're getting moves to the upside because people are hearing that, for example, in Europe, Audi's got a plant that's reopening for their cars. Czechoslovakia, there's one of the other manufacturers. Different regions, not the areas like France. First, I don't know what they build in France, Peugeot maybe, but other car areas aren't yet there. It'll come. Italy, there's a lot of pressure in the south to start reopening some stores and some factories. We understand the north, we understand the region. So we have to pay attention to what's going on. But we're closer to reopening things than we are from shutting them down. China, 75% back to work, according to even those that doubt Chinese numbers. That's all important. Foxconn saying that they basically are able to produce the phones again at 300,000 a week. That's big for Apple. So I think they're Apple, but they're 300,000 phones. As they're coming up, that's pretty darn important what's going on here. You're in an uptrend. You've had a pattern since right here, this one break. Once you cleared these highs, you went back to making the pattern of higher lows, higher highs, and the game was on again. Will we test those lows? That's going to be a question that a lot of traders are going to have to figure out now. I thought the market was going to have its problem here. It's cleared some important hurdles. It certainly cleared the 200-day average, but not by a lot yet. We have to see if it goes on to that 100-day and what it does there. But the idea that we're going to fall off the face of the earth, now you've made back half the losses in some of the key indexes and some of the key sectors. This is one of those sectors that's done real well. But we're in a resistance zone. You're at the upper Bollinger Band, the 100-week average. I think you're going to see traders bail up here. Why? They've made back a chunk of their cash. Now let's see if this is for real. Could be the thinking they do. Plus, there's chart reasons. You're overbought. You're up at a key resistance area. It's middle of the week. We then move into the SMH. Now, this is made, if you just visually look, you've got easily a 50% retracement that you've come back to. Again, I'm looking for the resistance at the 100-week average in green in the upper Bollinger Band. We pivoted around the 200-week average. So remember I said that the 18-week average of closes, this red line, I call that the line in the sand. It is just so often that markets go to that number trying to figure out should they be bullish or bearish again. If you look back at it, which, let's see if I can get this to do it. I'm not sure I can. Yeah, I am. Look at how this market was fighting that battle. Now, when this occurred, this move, you took out these highs. You're out of the lower high, lower and low pattern, so you've ended the bear trend. Resistance, the upper Bollinger Band 200-day average. You went to that number, you have your inside day, and you move higher. Now you've got the pattern of higher lows, higher highs. See what I'm getting at? You're pulling back and forth, and now you broke down yesterday under that low. So I think we're at a zone here where you got to be very cautious. You've come up 50%. This could be the area where the market wants to, if you will, people take some money off the table. They made back a chunk that they didn't think they were probably going to lose as quick as it happened. XLI. Well, sideways action. The market's trying to embed, converting from overbought to saying it wants to stay bullish, but not quite there. I'll give the nod to the bulls. You need another day of the sideways action, and then I get even more bullish. In the energy sector, okay, you have divergence. Often, momentum moves before price. The word is not always, it's often. And if you take a look, you're starting to break down in your momentum. The red line has gotten under your blue and it's pointing down. While the trend has been up, you've hit the upper Bollinger Band. 5% of the time, the market will trade over or under the black lines that make up the Bollinger Band. So on the way up, it's resistance. On the way down, it's support. When you get real tight in the bands, that's when you've got dynamite that can happen, because from that tightness, it's like compression of price. It wants to burst out again. Well, we don't have that here. So we'll see what goes on. But this market to me looks like it spent a lot of energy and that the momentum's trying to turn down in the market. QQQ. Again, it fought the battle at the 18-day average. You had this big decline, got up, hung there, moved higher, and just like the other market I showed you, fighting at the 200-day, but now you're at the 100. You have the embedded reading. So it means that the slow stochastic study took the two numbers that make it up, the red and the blue, called a K and a D. Don't ask why. And as they did that, they've gone over the 80 level for 3 days in a row. A signal that the market has run out of that upside momentum will be when the red line closes back under 80. You haven't done that. Until it occurs, it tells me that the pros will probably buy the market. I wouldn't be surprised if the 200 level becomes their buy number, but if you lose that red number over 80 and it turns down, then I'm going to look for the market back at the 18-day average of closes. In the emerging markets, you have a marketplace here that how many days do we have over the 80 level? Probably have to do this one time. There we go. So today, both numbers over 80, both over 80 yesterday, and on Thursday, we had both numbers over 80. So we're embedded here too. If the market's going to continue up, where do you see the resistance? I would say it's right here at the 57.83 level. What would give a warning sign? Well, certainly getting back under 54.62 would break the pattern of higher lows, higher highs. But when you get an embedded reading, this rules the day. So it's going to take the red line under 80, and at that point, then I'd look back for the 18-day average to be hit. In GLD, this is a get out and long. It's the first challenge again of the upper Bollinger Band. And if you go back here, you hit it, you backed away, you hit it, you backed away. Here was that narrow pattern that I just mentioned to you. This is different. These are wider already. So when you get down to it, and I admit on this one it slid through it, but didn't stay there very long. So I think you're at an area here where in GLD, I'm not bearish, but I do think you're going to get some profit taking stepping into the market. Same in the gold miners. But am I bearish? No, you're getting your embedded readings. So pullbacks into these areas, that's where I think the trade's going to step in and buy. And we know why the metals are moving. Everybody's starting to look and say, gee, if we get out of this COVID-19 situation, how do we pay all this money that we've just spent? And it's spent. We're already out of money in some of these special programs. I don't know if you're aware of it. You'll read about it in the news tomorrow. TLT. Were we not saying when we were up at this level that the market wasn't acting like it wanted to pop through these numbers? Well, now it's gone back to regroup against the 18-day average of closes, but on the way to doing it, it turned bearish today. You've got lower highs, lower lows. The bias is down since you closed under the 18-day average, and the momentum is down. So until you take out 165.72, the bears have grabbed control, and maybe wherever this Bollinger Band comes in, because this is going to come shooting up tomorrow, that could be the support zone. In the euro currency, this is bullish. You've got higher lows, higher highs for the bulls to keep control because momentum has not locked in. It hasn't gone to embedded. It's just drifting higher. You don't want to see this low of 103.01 taken out. Where's the resistance? Two levels, 104.51 and then the 200-day average at 105. I put it together, try to come up with the game plan. Now, let me explain what I do if I can get to this for you. I don't know if I'll be able to. There it is. One of the things I do in the afternoon is I try to put together strategies at 4 in the afternoon, right after the markets close. I give myself about 30, 40 minutes after the New York close. And Chicago time, I start putting together my video for subscribers. It is not on YouTube. You're not going to find it free anywhere. It doesn't work that way. It's specific trade ideas. I want you to buy here. I want you to sell there. I want you to do this. I want you to do that. The charts look like this. Black background. I'm not in them. I am talking over them. I've got my headset on. Actually, I have a professional mic here, and I'm talking to you about 27 charts on the markets. And on those 27, and sometimes I'll add special charts if I see something that really deserves it, I'm going to give you a touch of the fundamentals that are impacting those markets, points of entry and exit, and profit objectives. In other words, specific trade ideas with it. The markets I cover, well, you're going to see it's quite a bit here. All the spiders, the big ones, stock indices, the metals, the interest rates, the major currencies, and of course the energy market. These are the real popular ones. Now there are sectors within sectors, and sometimes I'll say, you know, looking at that, maybe I should add that one for a special. And I do that from time to time. This is a paid-for video. It's different. Not a lot of money. $8.95 for your first 30 days. No contract. If you decide to go with it, it's $16 every 30 days thereafter. We make it easy. You decide if you like it. How do you get to it? Go to our website. Under the word research, you'll see a scroll-down menu when you click it. You'll see Ira's Spider video. Away you go. It's that simple. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.